This is the Southside School of Financial Freedom Watch List and Market Report for the week ending September 11th, 2021. Our question this week is, what is the velocity of money? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.78% on Friday and was down minus 2.15% for the week. The S&P 500 decreased minus 0.77% on Friday and was down minus 1.69% for the week. The Nasdaq decreased minus 0.87% on Friday and was down minus 1.61% for the week. Looking at the week, we can see that there was one up finish versus 11 down finishes for the major indexes. The market was closed on Monday. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Wednesday, Thursday, and Friday, all three major indexes finished down. The new unemployment claims were 310,000 versus 335,000 expected. Job openings soared to 10.9 million, which was 1 million more than estimated. Early in the week, Bitcoin tumbled to almost 10% and it never recovered for the rest of the week. Natural gas prices increased 99% higher year to date. Mortgage demand fell to its lowest level in 2 months, and wholesale prices rose a record 8.3% from a year ago. New unemployment claims, number of job openings, Bitcoin tumbling, natural gas price increases, mortgage rate demand drops, and record wholesale price increases are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. The stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the velocity of money? The velocity of money is a measurement of the rate in which money is exchanged in the economy. It is how many times money moves from one entity to another entity. Thus, it is a measure of how money is circulating in the economy. The more money circulates or moves from one entity to another, the better the economy, the better most people do in the economy. If money does not move through the economy, people suffer. For example, if a bank or a big corporation or even a person simply holds on to money, that is, they don't spend it, businesses that sell goods and services do poorly, and of course their employees also do poorly. Even though the money velocity has been dropping to new lows in recent years, stock prices, however, continue to go up. Money is going into stocks and not into the economy. Where is your money going? Are you spending or saving your money? Or are you investing your money? Does your money go into stocks? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending September 11th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Airbnb Incorporated, ticker symbol ABNB. It's in the third column. It increased 4.56% for the week, but it was down minus 0.48% on Friday. Airbnb Incorporated operates a platform for stays and experiences to guests worldwide. The company connects hosts and guests online or through mobile devices to book spaces and experiences. Looking at a summary of results, you can see that Airbnb has increased more than 12.5% year to date. I did not trade Airbnb this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 2.95% versus 19.14% up for SPY, a difference of 22.09%. The Southside is losing to SPY by just over 22%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit for a few months. However, it had been recovering in the last month or so, but it took another big hit this past week. Will it get back on the recovery track? We'll see. The portfolio is 69.25% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 29.6% of the portfolio. Cash is 1.15%. The cash flow generated for this week was 0.61% of the portfolio account value. The account value changed by minus 8.65%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.69%. I sold option contracts on 2 positions this week, 1 call and 1 put, that ranged from $331.39 to $423.44. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com.